As Electrocomponents prepares to release its full year results for 2013, we're joined by Finance Director Simon Boddy. Thanks for joining us today, Simon.
It's a pleasure.
Firstly, could you take us through some of the key highlights of the annual results?
Certainly, yes. The top line, the sales grew about 1%, and within that, the online share grew. So we grew to 56%, and the sales growth was around 4%. So faster growth for the online. In terms of profitability was down year on year, about 19%, and there are really three factors for that. The first one is around fewer trading days and foreign exchange, which impacted the decline by about 8%. And the balance of about 11 was split between some gross margin pressures that we had and also some increase in costs. On the cash side, though, we had a strong performance on cash, very cash generative business, and we had about 6% increase in cash year on year, and we maintained the dividend.
And how have external market pressures, particularly a declining electronics market, affected your sales performance?
Yeah, so we've got a split of business between maintenance, about 60% of our business, and electronics, 40%. Maintenance was in growth, it grew about 3%, and that's the more resilient part of our business. Electronics, the wider market was a very difficult market. There's some real challenges within that, and we declined about 2%, so better than the overall market.
And to what extent have you seen this performance vary on a regional basis?
Yeah, there's been quite a variety of performances across the different regions. We've seen growth in both UK and Europe, and these are two markets where we've got a higher maintenance share, so that's been a more resilient market overall, and also particularly in the UK, the benefit of the launch of Raspberry Pi, the new credit card size computer. If you go to the US, really two factors there in terms of driving the decline. The first is the overall electronics market. Our share of electronics is the highest in North America. And also, it took some time for us to get used to the new system that we put in January 2012. But I'm very pleased to see that in the second half, that Salesforce productivity improved, as did performance. In Asia Pacific, quite a mixed picture. What we saw was some good growth from both China and Southeast Asia, so that's Singapore, Malaysia and the like. But in Japan, very tough market, electronics, high share there. And in Australia, that softened as the year went on, really due to the difficult market conditions in the natural resource sector.
At the half year, we heard how you're putting some actions in place to improve operating margin for the second half of the year. Can you update us as to exactly what these actions were and what impact they've had on H2 performance?
Yeah, so really three actions. The first was around driving sales, and we got back into sales growth in the second half. The second one was around gross margin, rolled out a price differentiation strategy that we'd seen in what worked in UK, rolled out into UK and Europe, and very much focused on getting greater customer discount effectiveness, and that increased the gross margins in the second half. And the third factor was in terms of costs. We got significant efficiencies, around 4 million, from a new global operating model that we put in place, as well as control of discretionary spend. What will all that add up to? Well, in the first half, we made £41 million worth of pre-tax profit. We made 57 in the second half.
Finally, despite profits being down, you grew cash flow and maintained the dividend. Can you take us through the drivers to cash flow and why you've maintained the dividend?
Yes, on the cash flow, we increased 6% overall, really three factors for that. Profit has been down, so that's hurt cash flow, but that's been more than offset by two factors in terms of a lower investment in working capital, and that was with stock turn as planned coming down from 2.6 to 2.5 times. And then we had a lower capital expenditure. Last year had significant rollouts on the systems side, both in North America and Europe. This year it's been Asia Pacific, but it's been at a lower overall rate. So that's really driven that overall cash flow up by about 6%. In terms of the dividend, despite the decline in profits, we've maintained dividend year on year. And that's really reflecting two things: the cash generative nature of the businesses we saw this year, and also confidence in the medium-term prospects of the business.
Simon Boddy from Electrocomponents, thanks very much for joining us today.
Thank you.
On the eve of Electrocomponents' full year results for 2013, we're joined by Chief Executive Ian Mason. Thanks for joining us today, Ian. Now, it's been a difficult trading environment over the past 12 months, but you've reported results that are in line with market expectations. Can you summarise the main highlights for Electrocomponents over the past year?
I think first, you're right, it has been a challenging year, and it's been a challenging year all around the world. What I'm pleased with is we've taken control of the things we can control. We've improved the gross margin in the second half, we've taken cost out of the business in the second half, so we've improved the profitability in the second half and hit our expectations. I think we've also set the business up for the future Markets will get better, conditions will get better, and we've got to make sure we're ready for that. So we've organised the business to a global operating model, and we've evolved our strategy towards a common global strategy.
Why have you made these changes to organisation and strategy?
We're a global business. I think we have to be organised as a global business. As we've grown around the world, we've got to make sure we've got the infrastructure in place to support that globally. But also our customers are telling us that's what they want. They're the same around the world. They have the same needs. And it's much better to do something once on behalf of everyone, so it can be more efficient, more effective in doing that. In terms of the strategy, we've done lots of learning on the strategy, and we found that what works in one place works in other places as well. So it's about getting more common so we can serve customers better.
Can you take us through the key defining points of your new global strategy?
It starts with the customer. We've got 4 target customer groups that are really the same around the world. Their fundamental needs are the same. They've got a bit of a local flavour, but their fundamental needs are the same. So we know who we're after. We're going with one global offer. Our customers want more and more product, and they want that reliably delivered. So by making our range available globally, we can say you're going to have a much bigger range and with real reliable service. We're also making sure that it's delivered through e-commerce, what we call e-commerce with a human touch. 56% of the business now is traded through the web. We want to make sure that's a leading capability, that we really know how to do that, but with that all-important human touch. We know customers appreciate that. And then also value for money, making sure that we generate real value for our money for customers. Underpinned by systems, by business intelligence, and by people, having a high-performance team. But we think that's the formula that will drive growth in the future.
And what impact do you expect these changes to have on your business, and what will the medium to long-term benefits be?
Well, through the cycle, as markets get better, we're very much driven by growth. So the first benefit is sales growth. We want to achieve a higher rate of sales growth for the group, which is going to come from taking market share from others. That's the first thing. It will improve profitability by doing things once on a common basis. We think we can do it in a more profitable way. We've got a very high return on capital. We think we can push that up so we can deploy our stock more effectively and make sure that we're generating cash that pays the dividends, the shareholders. We're a very cash generative business, and we think we can improve that cash generation of the business.
Ian Mason from Electro Components, thank you very much for joining us today.
Thank you.